Good morning and welcome back to the Real Wealth Solutions podcast. I am one of your hosts, Greg Scully. Joining me from the second floor today is Kim. Darren is out at one of our properties getting an inspection done. So quick up to the partnership type thing. We are able to be in two spots at the same time getting things done. So yay, partnerships. Kim, what's going on? How's your morning going? Has anything changed since you walked upstairs?
Nothing has changed since I walked upstairs. Everything's pretty good.
Okay, everything's okay up there.
Everything's okay upstairs.
Today, we're joined again by our friend and eventual partner, Heath Ryans. We are going to talk today about personal and business creditworthiness, kind of what it means to you as in terms of being able to borrow money is what it comes down to in one capacity or another. So this is something Heath has been interested in because he doesn't have much of a life outside of real estate, and but it's a great subject, and it's something I don't know a ton about. We've done now. I certainly pay attention to our credit score and things like that. I am guilty of not pursuing the business credit side of it as much as I should be, especially considering that we have a business entity that is multiple years old now. So that's probably something I need to know more about and look into. So enough of me rambling. Thank you again, Heath. Good to see you. What's going on?
Hey guys, what's up? Happy to be back. Greg is oddly right. I don't have much of a life outside of real estate. So you got me back right after a drill weekend, so I just shaved. It looked like I'm 12.
It'd be a good time to go out for a job interview or something,
It really would
if you
be.
wanted a job.
That's right. Can't do that though. Can't be doing that. So yeah,
I'll hire you to rip up some carpet and do a demo later this
You
week.
can even let your hair grow.
Yeah,
To
over
do
at one of
that.
our
You don't.
properties.
Yeah, you don't have to
Ooh,
keep
you
it short.
should have a mullet.
Yeah.
If you want.
So let's dive in. Uh, let's do an overview of just credit scores, your credit. What is that for somebody that has little experience with having credit cards or even loans or even having any need to reference their own personal credit score? Can we just talk about that for a few minutes?
Yeah. So your credit score is pretty much it's a numerical numerical measurement of risk for lenders. So it's it's something pretty easy for them at just one quick glance to say, okay, is this person a good borrower for me, for my business? What is the likelihood I'm going to get paid back? So there's three main bureaus that report. It's Experian, Equifax, TransUnion. So lenders all report to them. They don't talk between each other. So it's just each bureau may have its own specific information, but the Fair Credit Reporting Act of 1970 put in like the regulated system of what could be reported, what you can actually be, what your lender can kind of base your borrowing ability off of. Prior to that, it was based purely off character. So you could walk into the bank, say you're coming to me for a loan or something. You could have great income, look great on paper, pay all your bills, but I could just not like you, and that would be reason enough to not give you a loan. So legal systems over the time kind of came up with some stuff that said, okay, how can we more fairly represent borrowers across the field and kind of make sure everyone has equal access to stuff. So it's your credit score is a product. Each credit modeling agency sells their model to lenders. So it's something they're actually paying for. That's why there really wasn't a ton of information about it up until, more recently. I mean, it's these people, these agencies, they're actually selling their product. So why would they want everyone to know what they're basing off of? Because then their model's kind of useless because now everybody knows and they can do the same thing. So your two most popular scoring models. I may be rambling a lot more than what
No,
you're.
that's fine. No, keep going. I'll cut you off if I get bored.
Okay, sounds good. Your two most popular scoring models are the FICO, which is the Fair Isaac Corporation, and your Vantage Score. Vantage Score is a little newer. FICO's been around since 1956, 58, something like that. That's when they initially came up with their scoring model. So your FICO actually has, I mean, there's tons of different versions. There's at least 50 versions of your FICO. And the Vantage Score also has several different models. I'm not super sure what their most recent is. I think FICO might be on number 9 or something maybe. But again, there's different breakdowns on that based off the industry, based off the lender, based off basically what any single person wants, how they want to vet their borrower. There's basically a model for that. The two most popular models, FICO and Vantage Score, they use the 300 to 850 point scale that we're all pretty used to seeing. So if you pull up Credit Karma right now, they use, I think it's Vantage Score version 3.0. So that's at 300 to 850 point scale. So they're updated kind of to represent consumer trends. So what your standard borrower looks like 20 years ago may not be what your standard borrower looks like today. So they have to adjust these models over time to better represent. So some of the newer models, they actually place less emphasis on medical bills. They place less emphasis on collections accounts that have been fully paid off. It's stuff that they're seeing more and more and more and more across a broader spectrum of borrowers that they kind of revamp their models for, so certain people aren't completely excluded, or a vast majority of people aren't completely excluded from lending.
Yeah, let me jump in there because you mentioned Credit Karma, and that's a free service. They do have a paid version. I don't know what they do with the paid version, but that is it's online. You make an account, and it basically gives you it's all 3 bureaus, I believe.
Yep.
Yeah,
Credit Karma does
No, I think it's just
TransUnion
2.
and
Equifax.
Equifax. Yes.
yeah, so it gives you a dashboard of what your credit score is with these different reporting agencies. And additionally, it also gives you some guidance on very basic stuff that you can do to improve your credit score. I think the upsell with the paid version is ways to accelerate your improving your credit score. And then also they make money by pushing cards and loans and things that they take your profile and they're aggregating people that have products that fit into your profile, and they're basically giving you an opportunity through their portal to get these other financial products. So that is an extremely easy way to get in touch with your credit score. It used to be that you didn't really know your credit score until you went and got a car loan or something. And they would be like, yeah, your credit score is 580. Great. Your interest rate is this. And you may not have even realized that you had a problem with your credit score until you went and applied for something. So it is far easier to be proactive about getting your credit score up, especially, not only for investing, but even just if you're planning on purchasing a home, you can get ahead of that. Be like, hey, our goal is to apply for our first mortgage by August of 2021. Boom, you can get on Credit Karma. I think there's got to be some other services out there. I don't know, but you can start that process of improving your credit to get a better loan, which financially over a 30-year mortgage, should you end up paying that thing off and own it, it'll save you thousands of dollars.
But doesn't it also allow you to catch mistakes? Like if someone, they misreport something, or someone steals your identity and you don't know it. So going on there would be another way to be ahead of it.
Yeah,
catching
absolutely.
catching other people's errors.
Oh yeah, absolutely. If you're not on Credit Karma or some sort of credit monitoring thing, I mean, you're really doing yourself a disservice. Your credit score defines your life in way more ways than any number really ever should. So I mean, you definitely need to be on something like that. And like you said, it's super helpful to monitor fraudulent activity. They'll send you an alert if anything changes. Um, I'm on several different sites. Just pretty much anytime you open any sort of bank account or trade line or something with a lender, you'll get access to some version of a score. So it's pretty easy to get access to all three bureaus. Uh, like I said, Credit Karma does use Vantage Score 3.0. So your score, when you go to say apply for a car loan, may be different from your Credit Karma, which also may be different from if you would apply for a mortgage. It's just what model does that lender use? What helps them gain the best insight on their borrower?
Is there like a band that they're all fairly close, or is there, like, if you go to get a car loan and they say, well, your credit score is whatever it is, but you know that it's higher on another system, can you bring it to them and say, hey, but this says this? Or does it even matter that much?
I mean, you might be able to. Uh, each bureau, like I said, gets very specific information. So, for example, I know that if I apply for a Chase Bank credit card, they're going to apply. They're going to pull credit report from my TransUnion portfolio. So they won't. I know they don't look at my. I think Equifax. They typically do not look at my Equifax, but that could change for you. They may pull your Equifax, but never your TransUnion. So it depends on the borrower, how they run the report at that time. And I mean, that's pretty much going to be that. If you go to a different lender that uses your FICO score, for example, and they pull a 640 or whatever, but your Vantage score is a 720 because they hold different things. Basically, I think Vantage score holds your payment history a little bit higher than FICO. So if you have maybe some other marks and other aspects that are a little bit different, maybe you have some negative info on your FICO, Vantage score may not hold that as high value. So their score would be higher than your FICO score. So it ultimately comes down to what that lender is paying for. I mean, if they're paying for their service, you're probably not going to convince them to use another
Something else, right?
Yeah.
Yeah, and in my experience, looking at my credit score, it's within a band. It's usually pretty close. Like if my score was 500, you know, one reporting agency might have it as 500, one might have it as 510 or something. There's not a huge variation, and I don't think it's a variation that would really have any true impact on the car loan that you're maybe trying to get at that particular time or anything. And then I was just thinking that if you're young, new, don't have a lot of credit, or you might not think you have much to report from a credit history, you may be, I don't know if, like, say if you have a utility bill and you don't pay it, some utility companies do report to credit agencies, especially on the negative side of it. So if you go to collections on utilities or something, that can show up on your credit report. And I'm not an expert on this, and Heath, I don't know if you know, but I don't necessarily think that you get the positive benefit of paying your utilities online. I don't think they report both sides of that equation.
Typically, no, but you can use other services. For example, Experian Boost, that the commercial with the cow all the time. That's actually one of the things that they do is they aggregate payments from utilities, your phone bill, basically anything that's a recurring expense, and they'll report the positive information of that. I don't think it will report negative things, but I know they do look at bills like that and try to report them to help boost your FICO score.
Mhm. So I mean, if you've had utilities in your name and you had some difficulty and didn't pay them, that may be showing up in places that you weren't even aware of. Same thing with leases. If you were co-signed on a lease or something like that, and something went sideways, that can definitely be reported. And anything that would go to collections, which I don't know, you'd be surprised what gets reported to collections, even very minimal dollar amounts, but they can trickle down all the way to your credit report. So if you think that maybe you don't have or you don't need a lot of exposure to your credit score, I would certainly recommend still keeping an eye on it, because most of us at some point are going to be relying on it for something very important. And it sucks to get to that point where you're ready to move on something and you're held back, or you're negatively impacted over the long term for something that you may have been able to get in front of all along.
Right, and that kind of leads into my next point. You're entitled to one free credit report from each bureau per year at annualcreditreport.com. I saw a statistic the other day that said like 25% of people's credit reports actually have incorrect information. So if there is a Greg Scully out there who loves to not pay his bills, his bad information could very well trickle over onto your account just because it's a mix-up. Collections is very bad about that, getting things mixed up. So, if you're not monitoring the report and you go to apply for a loan, say, in this market, you're trying to buy apartments or something, you get it under contract, they run your credit, and it shows you have $10,000 in collections for skipping out on your credit card payment or your other mortgage payment or something. And that's not you, but it's showing on the report, and that's going to prevent you from buying. So that's why you want to pull these reports throughout the year. You want to monitor your credit through something like Credit Karma, directly from Experian, something through one of your banks. I mean, literally anything like that. Because if you catch this mistake, you can actually you can dispute everything on your credit report. And the bureaus have to be able to provide information about that claim, or it holds no basis and they have to remove it. So you send a letter in, hey, this is not me, there's been a mistake, fight it directly with the bureau, that gets pulled off your report, and suddenly, you jump back up to a 700-800 point credit score and your apartment loan's now approved. Versus in the other scenario, you didn't know anything about it and it was too late, and now you're going to lose that deal. So super important to keep monitoring.
Yeah. Are there any misconceptions off the top of your head? There's a couple I have in the back of my mind about credit in general that maybe people may be misleading themselves about one aspect of their credit report. I mean, mine that comes to mind is like the hard inquiries. Is I think there's a little bit of a misconception of how credit ratings or reporting is weighted. I hear all the time, it's like, oh, I don't want to shop my car loan because I don't want to have that many hard inquiries. First of all, I would argue that if by shopping your car loan, you get a much better deal and you save yourself whatever, a couple $1,000s over the life of the car loan, it may be worth having that hard inquiry on your credit report. But in terms of how much weight is put on hard inquiries, it's only like 10% of your score. And I think there's a misconception about why you should shop quotes, and that they do not necessarily affect your credit as bad as you may think. And the other one is carrying high balances. There's an interesting counterintuitive thing about having some high balances as a ratio on credit cards. Like if you're over 30%, they weight that differently. They say you're using too much of your credit. and I'm not recommending necessarily doing this, but if you actually increase your credit line on one of your cards or take on another card and are credit worthy for it to begin with, you could change that ratio to a lower percentage by not actually using any more additional credit. You'll have more credit available to you, but your 30% of credit used will now drop down to 20%, and your credit score will actually go up.
Right. So that's kind of all parts that we're going to go into. So I think I'll just run through the list instead of jumping around. But definitely bring that back up when we get there because that is part of it, and those are both very good points. So first off, I want to start with payment history. It's hands down the most important metric, pretty much basically throughout probably every model ever. I mean, if someone's lending you money, the only thing they're worried about is are they going to get their money back? I mean, forget the interest. Are you going to get your initial principal back? So
Yeah,
before we
my
go through all this, I'm
extensive,
just going to go ahead and just disclaimer, I am not a financial professional
yeah,
anywhere else. Consult your CPA, your attorney, literally anyone but this podcast. I just happen to know things about credit that I'm trying to share.
yeah, and the
So,
same thing. I did, nearly an hour of research on this morning, and I'll throw that in there. We're not recommending anything because we're professionals. This conversation is more about
informational purposes.
informational, for make sure you're thinking about this stuff, look at your own things, and then maybe we're going to throw out some things that
Do your own due
you
diligence.
didn't realize, like going back to that credit payment performance. Whatever I printed this thing off of, I think it was Investopia, it broke out the top 5 factors, and the credit payment performance is weighted 35%. So that's where your even late payments come in. um, uh, I don't know if overages, like if you use more than your credit line, if that gets reported necessarily. I've done that. I've never seen it reported as such, as a negative way. I guess if it hung out there as a balance for a long time, it may eventually get reported. But yeah, paying your bills on time, 35% of your credit rating.
Right. So payment history, like I said, definitely important. Some models rate it at 35%. Some models rate it 40%. I think Vantage Score reports it at 40%, which is what Credit Karma is based off of. But absolutely the most important metric. But if you're 30 days late, I mean, you're going to take a hit on your score. But if you're 90 days late and those accounts are borderline going to collections, you're going to feel it. It's going to hurt a lot. But if you're making your payments, you have, say you're making your payments on a credit card you've had 5 years or whatever. You very consistently you pay this thing off every single month, pay the whole balance off, never missed a payment. And then one day, for some reason, in the digital landscape, your auto payment gets broken, it doesn't transfer, whatever, things happen. So if you see that you missed a payment and it's late, you can actually call your creditor and explain to them, like, look, here's my history. I have a very long history of paying. We have a good relationship. Let me go ahead and pay this bill in full. And if you will, please don't report that onto my credit or remove the negative mark. And that's actually within their capabilities. They can do that. So if you call, you're polite, you're nice, you explain what happened, and they can see that you have a long history of, being a great borrower. They have full capability of removing that stuff from your payment or from your credit report. So it's not the end of the world if something bad happens, just completely out of your control. Now, if you are consistently late, it's not going to work out. So,
Right.
Doesn't matter how nice you are.
Right. It's your relationship with that bank matters, with that lender matters. So if you do good by them, they may do good by you.
Do you know if stuff ages out? Like if you've got a negative mark on your credit report, say for, oh, I know bankruptcies age out. So do smaller things age out over time, like late payments? So you had a difficult time, you got behind a few years ago. Can you see that on your credit report and then be super aware of it, knowing that like, hey, I have to, if I really keep my performance good, this is going to drop off in 2 months, and I'm going to see a significant increase in my credit score, and then be even that more diligent to make sure that you don't do anything stupid in the meantime.
Yeah,
And I
absolutely.
think that's just part of the awareness, is just knowing where you are, where things are aging out, so that you can very proactively kind of plan for the future of your credit score. I mean, you can actually
Yeah,
do that.
yeah. So, I mean, payment history, it's based off a percentage as well. So you've had this card for 100 months, whatever that pans out to be. I have no clue. And you got behind, you had one late payment, something happened, whatever. You just couldn't make that payment. You got one late payment. So there's 1 month out of 100 months that you didn't pay your bill on time. So you effectively have a 99% pay on time history. I mean, it's not as good as 100, but it's not terrible. So unless you start missing 3, 4, 5, 6 payments out of that same 100-month time period, it's not going to be a tremendous deal. It's not going to be great, but it's not going to destroy your credit and just bomb it into the ground. So one or two may not hurt you as long as you have a very long, consistent history of paying your bills.
Yeah,
So
that goes into one of the other metrics, is credit history, is actually length of credit histories. They like to see you having a relationship for years and years, and those two will kind of work together. Having a hiccup with somebody that you have a 6-year relationship will probably work out better than surfing cards constantly because you're chasing a 2% decrease in an interest rate or something like that. So playing the long game with the combination of having longer relationships and better performance combined on your credit report will be better than a bunch of new cards. Because and that's although we just said that the hard inquiries are a smaller percentage of how they're weighted, if you're chasing down 6 or 8 credit card applications a year, that's going to have an impact on it eventually.
right. So yeah, I mean, all this ties in together. We'll talk about credit utilization next, and then we'll roll into credit age here in a minute because there's actually a lot more into that and like some cool life hacks and stuff for that. So rolling into your next, what is generally considered the second most important metric is your credit utilization, which is what you were talking about a second ago. So it shows how much available credit you actually use. So it tracks both your credit across your entire credit line. So you may have one card, you may have 3 cards, but it also tracks individual line usage. So let's say you have, I don't know, a $10,000 limit on, let's keep it simpler than that. Say you have $1,000 limit and you spend $500. On that card, you have a 50% utilization ratio, which is, it's pretty rough. It'll move your score quite a bit. It's pretty wild how much it'll actually affect your score. But then simply you ask for a credit line increase and you go to $2,000. Now you have a 25%. Your score is going to improve a lot. Now you jump that up to a $5,000 credit limit and you have a, what is that, a 10% usage. So now your credit score improves a whole lot more. But that's just that one card. So say you have that same $500 limit, but you have a total of a $50,000 credit line or whatever across all your cards. now you have, what is that, 1% credit usage overall. So that looks really good. But if the card you're putting it all on still only has that $1,000 limit, that 50% is still going to outshine like your overall usage. So it's important, one, to have a bigger credit line, but also to manage your card so that your usage individually isn't so large. So if you have 2 or 3 cards, you may spread that $500 out across those 2 or 3. That way, any one card isn't stacked too high. Basically, credit utilization just looks like, are you able to pay your bills, or do you rely a lot on credit? That may not be the case. You may like to put everything on credit cards. I like to put everything on credit cards. If I'm going to spend the money, I want some sort of reward from it. It could be that form of cash back, miles, points, whatever. I want some sort of kickback for my spending just because. But to someone outside looking in, it could be you may be super over leveraged and you can't actually afford to pay your bills. So to get around that, if you are someone like me who puts everything on credit because you want those points, miles, cash back, whatever, you can actually pay your bill the day before your statement date, your statement closeout date, and it just wipe your bill and it won't get reported. So if you choose to pay all of your bills on auto pay, so at the end of whatever your statement date, you auto pay your credit cards off. That the amount you have on a credit card still gets reported to the credit bureau because it's your closeout date. But so, for example, one of the banks I use, their statement closeout date is the 25th. My auto pay drafts on the 25th, but because I pay on the closeout date, which is what they automatically draw, my usage still gets reported. But if I pay on the 24th, wipe that down to 0 on the 25th when it closes out, I have a 0% utilization, even though I use that card all month long. So if you're coming up on a big purchase, mortgage, car loan, whatever, what have you, you want to pay pretty much all of your credit cards off the day before that statement closeout date, so you have very low utilization going into that, so that way your credit score is absolutely at the highest it could possibly be in that moment.
That's good. I've heard the, pay it off to get, in order, pay it off monthly and you get your miles, points, cash back, all of that. But I didn't realize you could schedule it so that it doesn't even affect your number at all.
Right.
Theoretically, right?
Theoretically, it works. I do it all the time. Most of the things on here, I would not recommend playing with your payment history, but your utilization, your hard inquiry, stuff like that, you can play with and just watch what happens. It's not going to kill you. Don't pay with your payment history. Please don't. This is not financial advice. Derogatory remarks. So I'm just scrolling through the things listed on Credit Karma. Again, if you're not on Credit Karma, get on Credit Karma. Not that Credit Karma is the end all be all, but it's a easy basis. So I'm just kind of scrolling through the things that appear on there and just kind of breaking those down so you know what you're actually looking at.
And I just want to point out something, that income and cash on hand are not an evaluation of credit.
Correct.
So how much money you make and how much cash you have on hand has nothing to do with your credit score. It's all about how you use basically other people's money.
How responsible you are.
Yeah, how responsible you are basically with other people's money.
Right.
So, I mean, if you had cash on hand and you wanted to make sure you had a boost to your credit score for some reason, you could certainly pay down, knowing that, I'm going to have this mortgage thing that I want, and I want to 780 credit score to give me the least possible interest rate going in. You can plan for that by paying your balances down and giving your credit score a boost by using cash on hand. And then the other thing I just want to mention about the credit in general, they like to see you use it.
Right. If you want to pay your card down before your statement date or whatever, leave a 1% balance on there. That way you're actually using your credit. That shows them that you can use credit, you can manage credit, and you're comfortable using credit. It's not just you're scared of it, you have it, but you put it off to the side. So that's another.
Yeah, I mean, that's the
If you
difference.
have-
Having credit available to you and actually proving that you're able to utilize it in a responsible manner are two different subjects. So just
Right.
having credit out there is not the same as using it properly and responsibly.
And you know, some things can actually go dormant. They'll close you out for non-use. So what I do, I set up on all my credit cards, I have at least one bill, no matter how small, on each one of them. So for the majority of them, that may be, I don't know, a subscription to this on one card, subscription to that on the other card, just something so it's still being used every single month. And I'm still showing that creditor, hey, I'm still using my credit. I'm cool with using it. I have it. I'm spending it. I'm paying it off. We're still building a relationship.
Mm-hmm.
And them issuing credit is still helping me.
Yeah, you're going to buy gas, assuming you have a car.
Right.
Yeah, so there are things in your economy that you're going to be spending money on anyway. If you could train yourself to use a credit card for them, get the benefit of that usage for something that you're going to be transacting in anyway. Instead of using that debit card and you want to build up your credit, maybe get a credit card and use that for that purpose. This is not financial advice.
Not financial advice. And with paying your statement off on the closeout date, a lot of people are scared of credit cards. Oh, I'm going to spend, but then I'm going to be charged 20% interest, whatever. You don't get charged interest if you pay your bill off in full on statement date. As long as you're paying on your closeout, full balance, you're not going to pay interest. Interest is only accrued on an amount that rolls over into your next statement period. So if you're paying the minimum payment, yeah, you're going to end up paying 20% interest by the time the year is over. But if you're paying your bills off as they come, you have nothing to worry about.
But can you consider that? So we were talking about leaving a little bit of a charge on the account, a little bit of a balance on the card to roll over to show that you're using it, and paying that interest rate on it is kind of like the price of your credit. The price of your credit score. I mean, if you're using it, you can think of it as an expense, kind of part of having a credit score is you're going to have to pay a little bit of interest.
So
does that make sense?
So let me clarify. So
I think with Kim, are you saying, Kim, like if you incur some expense either through interest, even if you're trying to pay your account down exactly, very rarely, well, you can do it exactly so that you pay down to zero at the correct time, but sometimes there's some bleed over and you're inevitably going to be charged a little bit of interest. Are you saying that whatever that cost is an expense related to having a good credit score and that's worth it? Is that what you're saying?
Yes.
Okay.
And then he kind of a little bit differently, Heath was saying, leave something on your credit card month to month to show that you're using it and that you can make the payment and that you can responsibly use other people's money and you aren't afraid of credit. But by doing that, and again, having that little bit of interest that you pay is the expense for having a good credit score. And it's so small, it's worth that expense to have that good score.
Yeah, to save $60,000 over the life of your mortgage or something.
Let me clarify that one. So I was saying, okay, for example, my statement closeout date is the 25th. I have my auto drafts to scheduled on that date to pay my balance in full. So say, I run I run my balance up that month and I don't want all that usage being reported and being viewed negatively, I can manually go in and pay it down on the 24th down to 1% or whatever. That amount will roll over onto my statement date and it will be paid in full by my auto draft, but only 1% of the usage gets actually reported versus the 50% I had the day before that I manually paid down.
Right.
So you're
But
not paying
then,
interest, you're not carrying the balance.
okay, so got it. I understand. So if
You're actually paying in full on your closeout date through the auto draft, but you manually go in and pay down the usage the day before, so it's not reported as aggressively.
got it. That makes
Yeah,
sense.
you don't want to carry a balance over to the next month on a credit card if you don't have to.
Got it.
Okay, next we got the derogatory marks. So I don't really know why Credit Karma kind of splits these up, because honestly it falls into your payment history, but I guess they just have a separate section for it anyway. But this will be stuff like collections accounts, any bad debt you have, judgments, bankruptcies, whatever. These things, they stay on your account typically 7 to 10 years. Bankruptcy, foreclosure, all that stuff, it'll fall off after about 10 years. But if you're still making good strides with your credit, if you're trying to improve it, if you, outside of that one event, if you're still doing good in all other aspects, your score may still recover in 2 years time or whatever. Your credit report still going to show this event happening, but your score can recover as long as you are still being responsible in every other aspect of life. I mean, a bankruptcy is not the end of the world for you. You're still going to be able to do things. It's just going to take you a little bit of time to recover from it.
And it'll be more expensive in the interim.
Right. And like I said, the newer scoring models, they put a lot less weight on the collections accounts that are fully paid off. So, something goes to collections, you've hit a hard spot in your life, but you make up for it and you pay that down, and you pay it off completely, and you've still been paying on all your other bills as well. And they say, okay, this person pretty much clearly has hit a hard time, but they've made amends with everyone they owed money to. So there's no reason to continually penalize them for something that happened. But like I said, not all lenders do update to the nearest model. So it's kind of hit or miss. The intent is out there, but whether or not everyone actually pays to upgrade to it, it's up in the air.
Hey, it's Greg from Real Wealth Solutions. If you'd like to know more about our passive income opportunities, jump onto realwealth.solutions and hit that schedule a call button. We're always happy to talk about our multifamily and flip projects and to answer any questions you may have. Again, that's realwealth.solutions. We look forward to hearing from you. And now, back to the podcast.
Next up, we have credit age, which is what you were talking about also a while ago. So the older your average credit history is, the better. It just shows you've had credit for a while, you've been using it, you've been managing it. It's not your first rodeo, basically. So newer accounts lower your average age. So if you just go on an opening spree, it's going to greatly decrease your average there. So just be aware of that. It's not a huge impact, but everything counts. So it's a thing. Terrible advice that exists in the world. Do not close your older credit cards. It's terrible advice. One, you're going to eventually hurt your credit age. Closed accounts remain on your report, so for about 10 years. So the age will be there for a little bit, but it's eventually going to fall off. But when you close your accounts, you go from, so you have two credit cards, $5,000 limits apiece. You have a $10,000 credit line. You close that one card, now you have 50% of the credit line you had before. So any utilization you had is going to skyrocket. Like there's no reason to close these things down. If you have a card that you don't use anymore, and say it's a premium card, luxury card, something like that with an annual fee, you can do what's called a product change. You call your issuer up and you say, hey, I do not get the value from this card anymore to justify this annual fee. Can I please do a product change into a lower tier card without an annual fee? And that's something they can do. It's not another pull on your credit. You get to keep your credit line. It doesn't affect your age, but all you do is remove an annual fee from a card you don't use anymore. So, and you still have access to that if you need it. Just there's 0% reason to close a credit card. If you really can't handle having it sit around, just shred it, burn it, whatever you have to do, but don't close it. Life hack with that. So credit cards have an option to add people, and it's called adding an authorized user. So it's good for a couple things, but the life hack part to it, if you want to help your kids out, when they're first coming into the world, starting to use credit, when they don't have a credit history, they don't have a credit limit, they are literally a ghost in the world. And they go to apply for an auto loan, a credit card, whatever, specifically auto loans. It's, everyone jokes an auto dealer, there's going to be an auto dealer hunt me down. Auto dealers right outside military bases. It's always a joke. The new young airman, young soldier, whatever, is driving the car, the brand new Mustang Camaro Challenger with 45% interest that they're going to pay $90,000 with. That's because these people have zero credit history. They're you don't know who they are. You have no idea who they are from a borrower's standpoint. So what you can do as a parent, if you like your kids, I suppose, you can add them as an authorized user on your credit card. That does not mean you have to give them a copy of the credit card. You can add them as an authorized user, and then they go burn that card in the back before they rack your bill up, because ultimately you're still responsible. But what adding them does is it transposes your history for that card onto their credit report. So now this 18, 19, 20, whatever year old kid who's out in the world now has your 7-10 year credit history of good payments. And they also have, it should transpose your credit limit as well. So it gives them a major boost, where before you did that, they were a total ghost and no lender could vet them. They can now see, okay, at least someone in this family, maybe even them, pays their bills. So it huge benefit to them.
We had friends that did that for their kids for graduation from high school. They
Right.
put them on when they were about 16 or so. And so when they graduated high school, they're like, here's a credit score.
Yeah. It is the single greatest gift you can give your kids coming into the real world. Like I said, you don't even have to give them the card. You can burn it if you're like, yeah, they're a little sketchy with money. But you can at least give them the opportunity to have access to reasonable credit. In another way, you can share it with your significant other if you both put a lot of spending on one card or whatever. Mainly great for children, people without a long credit history, some jazz like that. Next up, we have total accounts. So this is your credit mix. So the more variety, the better. It shows your ability to manage both installment loans and revolving credit. So installment loans, your mortgage, your personal loans, auto loans, the couch that you really didn't need but you liked loan. It also shows revolving credit, which is your credit cards, your lines of credit, stuff like that. So the more the more types of credit they can see you managing, the more responsible you look. So with an installment loan, you have a fixed payment every single month. You know what that payment's going to be. There's no getting around it. If it's $500, it's $500. With a revolving credit, specifically the credit cards, if you rack up the spending, you can either one, pay the balance in full, or if you ran it up too high, you can cheat and just pay the minimum balance. So having a mix of both shows that you're not just skimping by, but you understand that you have bills to pay and you will pay them. And finally, on the scope of Credit Karma, we have the hard inquiries. So this is how many times you've had your credit pulled. A hard pull is different than a soft pull. So a hard pull actually goes on your credit report. That's what happens when you actually apply for something. A soft pull is what your pre-qualifications do. I think insurance often does soft pulls. Utility companies may do soft pulls. Anything that's just kind of like a surface level look into your credit will do a soft pull, and that doesn't affect your score whatsoever. You can have 3 million soft pulls and it won't make a difference. But the hard pulls is what actually will cause a dip in your credit. You can still see soft pulls if you look on Credit Karma, stuff like that. You can see every single time someone or you have pulled your credit, but it won't affect it. So the hard inquiries, they'll temporarily drop your credit score, but it'll rebound in probably 2 months. For example, I just applied for a credit card the other day to get a pretty sweet welcome bonus. It dipped my TransUnion score by 16 points, but with my new credit limit, it'll bounce it right back up, and probably next month I probably won't even notice the difference, but definitely in 2 months. Less is better, but as long as you're not racking up 5, 10, 15 inquiries back to back to back for no reason, it's probably not really a big deal. They do fall off your credit report in 2 years, but like I said, they pretty much don't really matter that much.
Why do they affect your score so much? Do either one of you know?
Hard inquiries?
Yeah.
It just shows that you're applying for credit. So
some people apply for credit out of desperation, so they don't.
Basically, if a lender looks at your credit report and they see you've applied for a credit card like every 2 months for the last year, they're like, you're probably in trouble.
Right.
Right.
If you get the hard inquiry and then there's not a corresponding credit card, there's not a corresponding approval, right? So you have
that
for some reason somebody has said no.
Yes.
Okay.
That's just the price of the game. I mean, if I'm applying for an apartment loan and I go through a couple of different lenders, I'm going to have hard inquiries, and that's just the price you pay for closing a deal. So it's not, but I'm also not just chasing cards because I want a 12-month interest only, transfer balance type game. Those could be very helpful when you need them, but they don't want to just see you chasing stuff.
Yeah. Okay. So it's generally accepted that inquiries of the same type within about 14 days are treated more as basically one pursuit of a loan. So like you were saying, shopping auto, shopping mortgage rate, shopping whatever else, as long as you're pulling them within this, relatively short amount of time, it's easy for different lenders, creditors to see, okay, you were pursuing one loan, you were just shopping around, you weren't out trying to buy literally everything all at once. So definitely it's good to shop. You get much better rates versus just going to the first person. that says yes, and it typically it shouldn't hurt your score that much because it'll be very obvious to anyone what you were doing.
And they may, when it comes to, if you've got those hard inquiries based on a large loan, you can have that conversation with whoever you're eventually signing with and be like, hey, if they bring it up, you'll be like, yeah, I shopped. You now we're across a desk from each other. Don't take this little dip in my credit report on that checklist mentality. Let's take it into the context of what I'm trying to accomplish here, and let's close this deal. And don't worry about a 15-point drop because AI tells you that I have too many hard inquiries. Put it into
Right.
context.
And we very well know that lending is still pretty well relationship based. I mean, there's the hard passes, but then there's always that area where you can still talk to people. So not
And
everything's the easy
there's
way.
also areas where there's a hard floor, for some of the very best lending. If you don't have a credit score of 650 or higher, they won't even underwrite you. It's just a checklist item. Doesn't matter how
Right.
much they like you.
Yeah.
They've got metrics that other people are telling them that the sponsors have to meet. So, yeah, if you want to be able to achieve some of the best lending, it becomes a necessity. Or you can solve that problem by having somebody else on your team be underwritten, of course, but eventually, you probably want to have that under your belt as well.
Right. Okay, so that's kind of it as far as just going over what Credit Karma shows, what the credit score actually is, and kind of the breakdown of how to manage it. Next, I just kind of wanted to roll into leveraging that score, specifically through use of credit cards. Um, I mean, it's going and getting a straight loan is pretty straightforward, but there's a few cool things with business. I won't say just business, but credit cards in general that you can do that can give you a leg up on starting a business, getting through life, whatever that I wanted to dip into. So if you have any questions in this or any comments, jump in with me. We're just going to talk about this for a bit.
You talking personal side credit still?
Personal side, yes, but we'll blend into business here in a minute as well.
Okay. I mean, for me, when you're just talking about using credit cards to your advantage, for very short-term flip type stuff, if you have a project that is going to be, we'll just keep it into the realm of flips, and you think you've got a 6-month time horizon to get this thing bought, rehabbed, and sold, you can put some of that on a credit card at zero interest. Because that's a very common offer is that, for the first 12 months, it's a zero interest loan. So if you're not able to go the more conventional route to a bank and get a construction loan or something, you can use personal credit to fund that at very low holding costs. So it
Could you do the same thing with a business credit card?
You can do that. I mean, yeah, absolutely. Business credit card. I mean, you're just basically on net 30. So if you're a painter and you need to do a materials and labor job, you can get all your material and labors on day one, get it paid for. You don't have to pay that for 30 days, finish the job in 16 days. And that cost you nothing and maybe got you the job, whereas somebody else couldn't be as flexible or couldn't fit their timeline, or they're like, yeah, I need to have the material supplied, something like that.
Right. So yeah, we'll get in. We'll do a little bit personal side, but this also flows into business side, and then we'll go pretty much straight into business side. So credit cards are mostly accepted pretty much anywhere in the world, but there are still a few places that don't accept them. The credit card issuers make money, so Chase, Amex, Bank of America, Citibank, Wells Fargo, you name it, whatever. They make their money off credit cards in two ways. One is by charging transaction fees. 2 to 3% is typically paid by the vendor you're buying stuff from. The other way is through the people who don't pay the balances in full, and they get some pretty sweet interest rates off of them. So not all the vendors accept credit cards for that reason. They don't want to pay those processing fees, but you can still use your credit cards. So if you find yourself in a pinch where, actually, we'll start surface level before you get in trouble. So you are having a home remodel done, whatever. I don't care. Whatever you're doing that costs money. You want to pay a contractor on a credit card. Maybe you want to get the points for it. Maybe you want to hit a nice welcome bonus. Whatever. You want to pay this contractor on a credit card. Well, your contractor has been doing this game for 40 years and he can barely use a credit card himself. So he definitely doesn't know the technology to accept the payment. Well, you can go on there's a service called Plastique, PLASTIQ.com. With Plastique, you can go on there, you can enter your card details, and they can actually pay a vendor for you. They'll send it in either the form of a paper check. They can do ACH. There's a few different ways they pay. They will charge you the transaction fee of, I want to say it's 2.75%. It may be a little bit lower. Sometimes they have some cool intro deals. So you'll pay that fee, but then you can pay whomever you need to with your credit card. So you can also do your mortgage that way. Generally, it's not. I probably wouldn't recommend it, but if you're in a pinch, you have some sort of installment loan, some reoccurring bill or whatever that you have coming due, you don't have the money for, but you're smart enough to know that it'll bomb your credit if you don't make it. You can go on here and send a one-time payment to that lender, that whatever. So you go into Plastique, enter all your details, and you send a paper check out, or maybe you send an ACH. So you can float your bills until you're able to pay it. Some issuers, specifically Amex, they don't allow you, American Express, they don't allow you to make your mortgage payments with Plastique anymore. They used to, they changed it a couple of years ago, I think. But I think a lot of the other issuers still do. Plastique is a free service just to hop on, sign up, and read through all their information. That transaction fee can actually be deductible from your taxes as a write-off. This sounds like a plug for Plastique, but it's just a really cool service. I recommend checking that out. It can get you out of a pinch.
Like save you a lot of money as opposed to the cash transfer. I don't know, is that stuff still available? I mean, cash transfer,
advance.
the cash advance off of a credit
Yes.
card.
So
they hit you on the front end with the fee. They also hit you with a higher interest rate usually as well. So, in the example of paying a vendor, maybe the tendency would have been like, well, he doesn't take credit cards. I'll take a cash advance off my credit card. You're going to get hit much higher fees than if that was a regular credit card transaction. Using the Plastique will virtually do the same thing because it's, in this case, maybe it's getting turned into a paper check that's going to, Heath's remodeling company because he's not sophisticated enough to carry around a square reader or something. Not different, different Heath. Don't worry about it.
I'm sort of sophisticated.
Yeah.
Yeah, so that's a really good point. Plastique does not work the same as a cash advance. You still get your points, miles, cash back, brownie points, whatever. But you're able to access your credit line into people that don't take stuff like that. So say you're buying livestock or some jazz. The auction house or farmer Joe down the street, he ain't even seen a credit card in his life before, but he knows what a paper check looks like. So you want to buy some cattle or something, and you got a 0% APR period, run it through Plastique. Now you just bought cattle for 0% interest for 12 months. Flip some cows or something.
So is that mailed then? Is that mailed to the farm?
You can choose to have it mailed in directly to them. I think you can have it mailed to you to give to them.
Okay.
Or,
So you
like I
need a
said,
little bit of
ACH.
lead time maybe, or maybe it was figured out at the bid level. It's like, yeah, I'm going to pay you basically net 30 or something. And you just run the check through Plastique and they get the check a couple weeks later and everybody's happy.
Right. Yeah. Just allow lead time for a paper check or a couple days for ACH, whatever.
And another upside to credit cards, and I don't know if this is talked about that much, you do have some protection as a purchaser against fraud, somebody not following through on the contract. And you can dispute that payment after the fact. And then they get into a fight with the credit card company instead of you.
Right. Yeah. That's purchase protection is
Purchase
definitely
protection. Yeah.
good thing to have there. Okay. So we'll just roll into business cards. So, personal credit, it's a factor in literally everything. So you might as well use it to maximize your business. You can't really start using true business credit through your business until it's about 2 years old. There's supposedly a way to get around it. You can buy companies, you can buy LLCs. They're called shelf corporations or some jazz. It's just someone's opened an LLC and they're letting it sit for 2 years, whatever. They may be running money through it, whatever. And then they sell these shelf corporations at a little bit higher price than it would cost you, but they've already been aged for 2 years. So they're technically ready for business financing. So you can purchase these companies for them, switch everything over in your own name, and roll that way, and then just operate solely on business credit. But I have no experience with that. That's about the furthest extent of my knowledge. I'm assuming it works. But I do know business credit cards, and that's what we're going to talk about. So on business credit cards, you're leveraging let's talk about who can even get a business credit card. If you do any type of business, if you do flips, if you own apartments, if you have a blog that you have some sort of thing for, if you have an online business, if you sell, I don't know, stuffed bunny rabbits on eBay, if you do anything that could be remotely construed as a business, whether that be through a true LLC or even in your own personal name as a sole proprietor, you can apply for a business credit card. If you're applying as a sole proprietor and you don't have an EIN, you just use your personal social. If you do have an EIN, use your EIN. But most business credit card issuers don't report your activity to your personal credit. So, for example, I have a couple business cards, and I want to do. Actually, if you listen at all to my story in my previous podcast, you know all about this. So I financed an entire renovation on business credit cards because I had zero money. So you apply for a business credit card. There's plenty of business credit cards out there with 0% APR periods. They typically range 12 to 18 months. You'll occasionally hit an oddball that's like 6 months, but for the most part, you can run out 0% interest for 12 months, carry whatever balance you need to. So you apply for one, you get a $5,000 limit, whatever. That $5,000 credit line does not show to your personal credit. So it doesn't benefit you really at all. But you can use that full $5,000 and you can run that out for the entire year, and it'll never be reported as 100% usage to your personal credit. So that being said, you're financing a big renovation, or an unexpected expense comes up in your business, whatever. Maybe you're purchasing inventory that you may not see a full return on for a year or so, and you don't have big sophisticated lines of credit with a bank set up yet because you're just starting. You can get these credit cards, you can max them out and use that money for the operations of your business to get things rolling, and then just pay them off. It's all fine and dandy, and your personal credit score remains protected. However, there are a few that do report activity. It's word on the street, and I don't know this for a fact because I don't have either one of the cards because I listen to the word on the street. It's said that Capital One and Discover, they report all the credit, all your activity to your personal credit, but I know for a fact Chase, American Express, and Bank of America do not. So that means if you get a Capital One card, business card, so like I think their Spark card is one of the more popular things. So there are reports of it reporting to people's personal credit. So you may get that card thinking you can use it to operate your business for a little bit and just kind of float your cash flow, but then it may end up reporting on your personal credit.
So yeah, and I would add, even if they're not credit cards, there's companies that you can get lines of credit with that do report to the business. It's done in Bradstreet, I think, is the main one. Like Uline comes to mind. I mean, there's some large, they sell everything from garbage bags to, bathroom vanities or something like that. So if you're not able to get a credit card, you may be able to get just things like your office supplies or things not necessary. If you're a mason, you might not be able to buy bricks through Uline, but you may be able to buy all your back end paperwork type stuff and build up some reported credit use through your business that way without actually having a credit card.
You do have to pay your bills still.
Right.
Let's throw that out there. You still have to pay your bills. Even if your activity is not reported to your personal credit, as far as like credit lines, credit utilization and stuff, most of the issuers will still report to your personal credit if you just start trying to not pay them, because that's not a thing you can do. So still use these responsibly. It may not be reporting your activity, but they will absolutely let everyone else know if you're just trying to steal money from them. I think, no, I just won't say that. Just pay your bills. Just pay your bills. In summary, pay your bills. But have a good business plan before you start doing this business card usage thing. Don't just run up your bills on the expectation that you're going to sell all of your inventory, or this may be a successful flip, but like nothing about the market or something. Like, have a good business plan in place and a good, reasonable way to repay these at the end in sight.
And I think just be cautious.
Nothing's free.
Be cautious.
Yeah.
Be cautious.
Just like
nothing's free. Right.
Nothing's free. You will pay for everything, one way or the other.
Yeah, it's great for evening it out an otherwise variable experience.
Mm-hmm.
Because in most businesses, cash flow ebbs and flows at different rates than your expenses. So, business credit can make that that dance a little bit more consistent and more of a budget item rather than a juggling item.
Right. It may be that you're just not, you don't have the age, you don't have the history yet to get, an actual operating line of credit from a bank. So the credit card, while your limits are going to be smaller, it'll at least get you to that next stage in your business.
And I
So-
imagine if you've got the credit card under your own social security number, it's gonna come back to you much faster on your credit report. If you
Right.
don't handle it properly, it's gonna come back to you much faster. It eventually will if you're using an EIN number, but if you've got it on your own social security number, it'll find you faster for sure.
Right. And they back all of these inquiries back to your personal credit. They're referencing that for the approval anyway. So they already
Sure.
know it's not going to be, they're not going to have a hard time finding you.
That's a good
will
point. I don't know if
find
you can get business credit without already having the personal credit somewhat established. Because if I understood you correctly, I mean, they're going to look at your company, your EIN. They're also going to look at you as an individual as well, of course.
Absolutely.
So
Absolutely. Every
one
single credit card
follows
application
the
will
other.
review your personal credit.
Yeah, you might have a tough time going for. Don't think maybe that you can get business credit as an end around to having bad personal credit.
Right.
I think they have to be in alignment. They both have to be potentially strong.
They absolutely will. Those inquiries are going to hit your report just like you were applying for personal credit. The
Mhm.
only differentiation is you may not have that credit line and credit usage reporting. So it's easier to operate your business with these, but you personally will always be looked at until you get to some sort of non-recourse. And these credit cards are not non-recourse.
Mhm. They would just go after the business before you personally. That's the hierarchy. They might trickle down to you eventually, but that credit is tied to the business entity, not to the personal entity. So
Unless you're using your own EIN. If you're a sole
But if
proprietor
you're using
and
your
using
social,
your
yeah,
own
if you're using
social
your
security
social,
number.
yeah, that's a little bit tougher. And there's a lot of people that I've taken a small course on this that was packaged into a larger platform, and um, the steps are. It seems to be more steps. It seems to be a much longer game. Excuse me. But eventually, if you're able to, you take these smaller, credit card relationships or Lowe's, Home Depot type relationships as a business. Some of them do report, and I know you can Google what businesses report to your business credit agency, and you'll get a list, and they do change. So that might be something that you have to chase around a little bit. But
Right.
building those up at the small level, that's when you're able then to go to your local lender and say, okay, now can I get a line of credit for my business at a much substantial number, and that's where it gets. That's where the work pays off.
Right. A good resource as far as like shopping business loans, business credit cards, some more real business financing information is nav.com, nav.com. That's kind of what they specialize in. You can set your business up on there. They'll show like your business credit report if you've got a Dun and Bradstreet number or whatever. They'll show all that, show your financial scores for your business and stuff, as well as I think they show your personal Experian, which is the number missing from Credit Karma. So
Cool.
that is pretty much all I've got.
Yeah, I was going to add, going back to the personal credit stuff, there very often in many communities, there are free resources either through like the SBA, or there's even, nonprofit credit building outreach, whatever. So if you do need help besides getting on Credit Karma or some other online,
And a lot of those local
there's,
resources
yeah,
are at no charge.
That's exactly what I'm saying. Yeah, there tends, there are ways out there to do this.
Fun facts,
At low
anything
cost.
the,
And there's also, you'll hear it on whatever, radio stations, 1-800-82 now credit for life, and then they just say that number like 6 times in a row, and that's the whole commercial. Um, uh, I don't know what they do. I know they cost money though.
yeah, anything these, I'm going to be headhunted now, but anything these credit fixer upper guys, whatever, anything they can do, you can do yourself just for free. Because all they're going to do is send the same letter to the credit reports as you would, saying, "Hey, I didn't do this, fix it," or "Hey, show me proof that this happened, fix it." If they can do it, you can do it just for free. It just takes more research on your end.
Right.
And
Or
half of them are
utilize
kind of
your
sketchy
local,
anyway.
small business association. There's one, I think they're in every state connected
I think
to
we
university
have one in
to,
Johnson City, don't we?
I believe so.
I think
But
so.
we
I
we
think
used
ETSU
one
has
when
it.
we were back in Alaska, not to fix credit, but to talk about all of these things. And it didn't cost a thing, and it was super valuable.
Yeah, and doing small things that are recommended on some of these online platforms or portals or whatever it is, dashboards related to your credit report, moves the needle pretty significantly
Mm-hmm.
in very short time. I mean, I think to get a modest increase in your credit score when there's not a really significant underlying problem like a bankruptcy or something like that is very possible to do in pretty short order by just being very intentional about maybe 3 or 4 metrics of it. And some of it may be counterintuitive, like actually increasing your credit limit to lower your ratio. Um, and then the other thing is like we were talking about what is it, the length of credit history, and everybody gets inundated with crap in the mail. All these offers. Some of those offers do look really good. They do take a lot of discipline if you're going to do that chase game, like, oh, I'm going to get this 6 months interest only here, and then I'll close that down and then transfer over to this card. You make one mistake. Yeah. Well, right. You make one mistake. Now you're at that 22.5% interest rate until you're able to work some other kind of transfer magic. You can also just go to your existing issuers and say like, hey, I've been with you guys 5 years. You're charging me 8%. I'm getting these offers at 6.25. Let's work something out. My dad has told me he's done that, so I know it worked for my dad. He's a super nice guy. Maybe that was it.
He's
But
also retired and has lots of time on his hands.
well, that's true. But I mean,
but it's possible.
I don't
but
think it would
right.
take much longer to
right.
make a phone
You're
call
right.
than it does to fill out a credit card application.
No, I know you're absolutely right. And he's a nice, calm, gentle person. And so that I think is super helpful.
They want to keep you.
Mentioned that earlier. And you mentioned that earlier.
And we're all in like this multifamily stuff. It's just like a renter. It's much easier to keep a paying customer than it is to go out and find a new one.
Yep.
So they will often work with you.
I would just personal opinion on the credit limit increase thing anyway. Most of the time, they're going to run your credit again for the credit limit increase. They may not if you sweet talk them enough, but they probably will. It's just as easy just to go ahead, open up another card, you may get an even bigger credit line than bothering with the increase. Plus, it helps you build, another relationship either with another issuer, build a better relationship with your current issuer. Maybe you get better rewards from this other card or whatever. So balance it out. You don't always have to go the credit limit increase route.
Right.
Yeah. And again, we're talking about this today, not really as giving advice. A lot of this was personal experience, what Heath has done to accomplish some projects. I was speaking from what I've done myself or read online. vet all this stuff out. But, the very simple thing of getting onto one of these free dashboards where you can at least pay attention, and every month you get an email that says, "Hey, Greg, your credit score went up 15 points or something," and you can click on it and see why, or you can see why it went down, or you can see what's being reported. So yeah, just maybe get you thinking a little bit about, oh, what can I do about my own personal situation, and what resources may I need to chase down on the business side of it. That one, I really need to do it. I've got a whole bunch of questions about that one that would take another hour. So that one to me seems a little bit more complicated, the business credit thing. But it pays huge dividends.
You have to pay for actual business credit reports too, and they're public. Anyone can access your business credit report versus your personal should be free and only you can see it.
Mm-hmm. But, I guess the baseline side of the business credit thing is there may be some low hanging fruit, even for new businesses with very modest credit limits, that may help you navigate some of these ebbs and flows of cash flow, or buying materials, knowing that, your job will be done, and you'll get paid before you're going to incur any interest on the materials that you bought.
But it also sounds like just building business credit is the same as building personal credit. You start small, you add to it, you prove that you can do it, and you continue on. So I think there's some parallels there as well by getting that Lowe's or Home Depot credit card and in the business name, and doing those same things that you did creating your own personal credit would grow that.
Mm-hmm. And this thing seems like one of those subjects that when you hear people talk about it and these, hey, what would you have done differently? It's one of those, oh, I wish I started sooner. So I think the business credit side of it gets lumped into that category, that, you're really talking about having a business, you might as well just start doing that now. Put it on your list. So I don't know. Anything else, guys? Should we wrap it up? It's been a while. I don't know what it's been, but
I think I'm good.
We'll add Heath's contact stuff. I don't think anything's changed, but we'll put that plastique reference in there. Anything else we want to drop in the show notes, Heath?
nav.com and Credit Karma.
Yep.
Okay. Right on. Yeah, we want to thank you again for joining the Real Wealth Solutions podcast. We'd greatly appreciate it if you took a moment to give us a review, and whatever that other thing is. Oh yeah, subscribe. We're trying to get better at this. You have to get intentional about this stuff and print it in large font. And if there's someone and would benefit from this conversation today with Heath, we'd appreciate it if you shared it with them directly. And if you want to know more about what we're doing at Real Wealth Solutions, we're at realwealth.solutions, and our contact information is there as well. Again, we appreciate it. Kim, let's go take the dog for a walk. Heath, let's go demo an apartment later this week.
Let's do it.
All right. Thanks
Bye.
again. Talk to y'all later. Bye.
Bye.